execution ability. But the good news which I want to give you is that we are not capital constrained. A lot of people do not deliver their targets because they are capital constrained. We are not capital constrained at all. We have 1,383 crores of cash. We generated, you can see the operating cash that we have generated from the balance sheet, upwards of 500 crores. So we have very good cash generating ability. Therefore, capital is not the constraint. The constraint is approvals. The constraint is execution on the ground. So some things will come, if not in FY25, they'll come in FY26. But we remain, and you may notice that whatever we say, when we said we will hit 5,000 by so-and-so year, we actually achieved 1 year earlier. When we say 10,000 will happen by 2030, it will happen by 2030 or maybe a little earlier. So I think that is the way to really see this business. And we are in the business for long term, and we are not actually too worried about in one quarter if there is an extra or a little less.
Okay. Got it. Sir, second question is on the resort income side. We have seen in this quarter it has grown at 7.4%, and though we are at a highest occupancy and the member additions are also growing at a double-digit rate. So if you can throw some light on the resort income side, how we should look at going ahead.
Yeah. So resort income, you should definitely look at a growth higher than what we have delivered this year. Why? Because we got hit in the Himachal Pradesh, Uttarakhand, Sikkim. We would have done even higher occupancy. We would have even done higher revenue had it not been for these events that happened. Plus the acceleration of these 387 rooms which has come at different points in time. The full effect of that will be seen in the coming year, right? So we have been now every year adding 360, 370, 380, 400 roughly rooms. So the cumulative effect will begin to come out in FY25. We are aiming to increase our F&B spends per room night also. There is a lot of activity going on there. There's a project going on internally. We have a corporate chef who is driving newer initiatives on the culinary side. So I am very confident that the resort revenue, if you look at a CAGR for a certain period, I think say 5-year period or something like that, we may be upwards of 12-13%. So this is a bit of an aberration this year, where we have done approximately 7-odd%. So what happens is that these things, like if last year we added Tree House, which was one of the resorts in Jaipur. It came in the middle of the, let's say, year. It has not fully ramped up. So I am a believer that, and also this particular resort, which I'm mentioning, is in a subsidiary company. So it's not showing in, the revenue of that is not shown in here in the standalone results which you're looking at. So what is happening for us is that there are some of the resorts are now because of the way the company is structured, including these PPP projects are going to be in subsidiary companies. So we'll have to probably start looking at the total revenue, how it is growing when we are investing in various subsidiary companies through for buying of resorts, etc. But the big picture which I'm giving you is that as inventory acceleration happens, which is beginning to happen already now, our resort revenues will grow faster than they grew this year, number one. Number two, we have anyway at a CAGR level delivered about 12, 13, 14%. At one point of time, I used to see 14%. Now it may be slightly lower because of this year. Plus, if there are no natural calamities, which I mentioned, we will definitely see higher occupancies and therefore again higher resort revenues. So multiple levers need to be pressed here, and we are pressing all the levers.
So one reason, because in Q4 also we have seen 7.4%, maybe because we are adding more lease property, particularly on the associate properties that we are adding, where the resort income might be lower than our own property. Is that the right understanding?
So always when you go on, and the hotel industry model, when you go on your own property, obviously the top line comes to you, the profits land in your bucket. When you go for, let's say some kind of inventory setup that we do through the associate properties, but lease properties as good as own property. So we are constantly adding lease, own. See, if you look at this year, we did this Jaipur acquisition, that's our own. We expanded our Sonora, that is our own, right? We also added dry leases, which means we are paying rentals and the whole thing comes to us. Yes, we added few associate properties where the income doesn't come to us, it's a cost to us. But if you really look at it, the fact that we are creating choice for the customer, when we create choice for the customer, using all these tools, we are also able to accelerate member addition. So this business has to be somehow seen as a whole rather than in parts. So everything serves a purpose. But you are right, at an overall level, the resort revenue, since our focus is greenfield, our focus is brownfield, our focus is leases, and obviously when you do this acceleration, then the associate properties obviously will come down significantly, and therefore you will see a higher resort revenue growth in the future.
That's the last question, if I may.
Good.
That's on the other expenses. We have seen 19% growth in the quarter. So any one-off in that?
Other expenses 19%. Ram, would you like to add, give any color here? In quarter 4, he is asking.
Yeah.
Go ahead, Ram.
So in other expenses, so Pankaj, if you see in the see what happens in consolidated results, whatever borrowing you do outside India, and if it is at lower rate of interest, there is a inter-transfer of interest cost or finance cost to other expenses that is under Index 23. So that is the impact of that, basically. If you see the overall number, our EBITDA and other numbers are growing, but there is an inter-transfer between the two line items.
This is with respect to the standalone, I was asking.
With respect to standalone, what happens when you have the resort income going up, right? So in resort income, the way we do the accounting, similarly the expenses also increase in resort expenses, and that they are.
Yeah. So with respect to the resort expenses.
Yeah. So for example, in the resort income has gone up from say 84.7 crore last year quarter 4 to 94 crore in standalone, right? So correspondingly, you have a resort expenses which is categorized under other expenses.
Okay, got it. Thank you. Thanks, Patil.
Thank you very much. The next question is from the line of Nilesh Shah from Julius Baer Group. Please go ahead.
Yeah, hi. Are you able to hear me?
Yes, we can hear you, Nilesh.
Okay, great. Sir, yeah, I think, yeah, I would just love to get your perspective on something. Right? So I mean, yeah, one thing that I have often struggled with respect to Mahindra Holidays is the fact that in our business, right, yeah, the way accounting happens, right, is fairly complex, right? So, sir, yeah, given that you have spent a good sort of 10 years with this company, right? From that experience, right, what should be a critical, metric, right, that you would, highlight that we as investors and and the wider management team should look forward to, right? I know that would OCF be that number, right? Just please, if you could reflect on your on your sort of time here and share some perspective, right? What should be the right metric that should be like the North Star? May not be one, but you could share a few that we should look forward to.
Okay. See, you made 2 comments, I think. The first comment is that accounting is a little complex, and I would urge you to spend some time with our CFO, understand the accounting, because while it is complex, consistently now, the accounting standard has been in use for more than 5 years, so you can see how, we have sort of delivered on all metrics. But if you ask me as operating people, the matrices that we are very, very paranoid about is number 1, the member additions, which leads to the cumulative member growth. The second one is, are we bringing in enough inventory? Because the last thing we want is inventory lagging behind, because that can lead to a different problem. And these are two very, very critical operating matrices that we track. The third one, which we track, and that is why it's there in the investor deck also, is are we adding to the deferred revenue? Because if we are taking money out of the revenue, deferred revenue, because of the accrual, we have to add more than what we take out. So that is something that we are very, very careful about, that we should be constantly adding. Obviously, if the member additions are good and you are growing, you will see the deferred revenue growing as well. Obviously, at a certain cost, we need to add members, which I explained to Himanshu, how we have brought down the cost of acquisition. Then obviously the cost that is also getting deferred is lesser, and therefore the net deferred revenue is another number which we look at. The fourth metric is obviously the cash that we generate. And the cash generation in this business is a function of how do we handle our receivables, and we are in a very good shape there. So collections are very critical, both the EMIs as well as the annual fee collections. Those are very, very critical for us. Otherwise, the ECLs can hit us, estimated credit loss can hit us. And when we are taking in members, we want to take members who commit higher down payment. That leads to a very healthy business, because higher down payment paying member is more committed and equally likely to spend more money at the resorts. The other metric that we look at internally from a long-term standpoint of view is that how much are we able to engage with members, as I mentioned, in terms of the spends that they do at the resort, equally the referrals they give us, and also the fact, as I was saying, that how regularly they holiday, because people who holiday regularly also pay us the annual fee in time. So for us, annual fee collections, EMI membership fee collections, ensuring that the receivables don't age or, they are not overdue beyond a point. The fact that we are adding members, good quality members who will spend money at the resorts. The fact that we are generating significant cash. Okay. And obviously, CapEx, if you're talking of free cash, that's to my mind not a worry, because we have enough cash. Even if we spend a little more in a year, we are adding inventory for the future, which means we are creating capacity for the future, technically. So for us, free cash is not such a worrisome thing. How much cash? And more importantly, are we using our capital to work better? Which means if we put out a resort, are we able to fill it up? So for us, occupancy is a very important metric, because in another hotel business, if you are little low on occupancy, you will push up the ADRs. We don't have the opportunity to push the ADRs because ours is a pre-sold membership. So our aim is to push occupancy, therefore the F&B. So resort revenue is largely F&B and the activity. So a lot of activity revenues also we push. So resort teams are all the time working on to ensure that the revenues, they are pushing higher and higher without the room revenue. Because room revenue is very limited in our case. So these are the things that we internally look at to keep the business on a very, very robust path. Because I have practically covered the entire business and the critical elements in the business that need to be looked at beyond simple income, EBITDA, PBT and PAT.
Right. Okay. Great. Just, sir, one last thing, right? Sir, how have you seen, I think that from a consumer behavior point of view, right, 2-3 things have happened, right? Because, I think if we go back a few years, right, this industry used to have a lot of, unregulated players or, not so serious players, right? And people lost a bit of money and there was a bit of apathy in that. And then we saw that travel demand has come back and hotel rates have gone through the roof. So therefore there is a strong consumer demand once again. But we are also seeing that, how consumers pay, right? It seems you're also saying that the share of EMI, has kind of come back, right? So, so, I mean, as you look forward, right, do you expect, right, the consumer sort of behavior, to be supportive towards, what we are doing, right? And, and the second question is, from a competitive intensity point of view, do you believe this, this sort of purple patch to continue?
Okay, many questions in one though. Let me try to answer them one by one. The first thing is the consumer behavior that you highlighted. Over the last 3 to 4 years, you may have noticed we have launched new products. We have a 15-year product today. We obviously have a product for seniors. When I say seniors, 55 and above. So people who are, have all the time. It's a points-based product. It's a product called Bliss. That's a 10-year product. And we have also, and earlier we used to have only 25-year products. So we have this 15 and 10 is for seniors. And we have another product which is a 3-year product which is Go Zest, which is without any annual fee. It is meant for people to sample and then upgrade their membership with us. And then we have a 4-year product also with annual fee. So if you really look at it, we have tried to cover the life stages. When you are young and you are not probably wanting to commit, you come with either 3 or 4-year product. And as you sort of move ahead in your life, you could look at a 25-year product or a 15-year product when you are having children. And then as you are sort of, if you are coming into our system at the age of, say, 55, 60, then you could look at clearly Bliss, which is a 10-year product. And then, so what happens is if you look at life stages, we have pretty much covered all the life stages, and therefore behaviors which used to worry us that people will then, they won't buy 25, they would want options. We have done that, and one of the biggest fears we had was there'll be heavy cannibalization. The good news is it hasn't happened because there is value proposition depending on the life stage you are in all of these products. So our team has very, very smartly been able to sell all, and at a fairly brisk pace also, as you saw in terms of the milestone member additions that we did. The other big deal in our business is, even if you are not able to afford a product at a certain price point, we have laddered the price points. I mean, you name a price point, we have a product there. That's another thing that we have done. The second thing is that people upgrade. The best part for us is that the more you stay with us, the more you think that, I must be able to holiday in a upper season. Or if I'm an upper season member, I can go down season and holiday a number of days increases in our case, because it works like that. So we see a lot of upgrades. And then what we do is also in terms of engagement, we expect our members to do member get member, and they also get obviously great rewards as a result of doing that. We have a very good loyalty reward program for the existing members when they are able to recommend a member and the member signs up. So the point is that as far as the behavior is concerned, people are looking at vacation ownership because also, not only because of the inflationary pressures that you mentioned, but because of the unique selling proposition, which is a larger apartment size where the entire family can stay, studio 1 bedroom, 2 bedroom, which is something that people forget often. And the second thing is there are enough number of activities in the resorts which people can engage in at various life stages of theirs. I mean, if you are an elder person, you do different things. If you are younger, you do different things. We have activities for all. I'm not, and I'm enumerating them because they're all there on our website, because that will take away time from maybe other people who may want to ask the question. So the point here is that our proposition is very unique. We are in the resort business, we are in timeshare business, vacation ownership business, we are creating activities, and as a result, we are catering to all life stages, and we see multi-generational family holidays happening, 3 to 4 generations holidaying together. That proposition is very unique. And you're right, a lot of flyby or even smaller players have vanished, because this business actually is built on only one fundamental thing, which is trust. And Mahindra Group with the brand Club Mahindra has garnered the trust, and we are right now in our 28th or 29th year of running. So we have stood the test of time. So we are going to be around, and people know that we are going to be around, and therefore people are willing to sign up for us. And that is why, our proposition will remain very differentiated, very unique compared to any other player who might want to come in. Timeshare or vacation ownership as a category will always survive and grow, given the affluence and also the availability of disposable income that people have. A set of customers will find it very attractive. A set of customers will think that I don't want to commit even for 3 years. And that is fine, because each product every category is not meant for every customer. So if you think from life stage angle, if you think from behavior angle, if you think from the customer value proposition angle, if you think from the fact that we are in these inflationary times a great option for people because people are enjoying in our holidays without paying for the increased, obviously, tariffs and the GSTs. Obviously, they are saving hugely. And to my mind, that is a very unique value proposition, and there is none like us. And the other part which I did not mention earlier also is that the network effect. Today we have more than 100 resorts where members can go, and this is going to become 150, 200, whatever, including international. We are already at 150. The point is that more you add to the network, more the power of the network increases, and therefore you attract more members. That is the beauty of the model, which is very unique. It generates cash, it generates confidence in us to invest in more resorts. So it's a great business model from a consumer standpoint, from our standpoint, but it is not an easy model to replicate because you need to build trust, and without trust, this business cannot stand. So therefore, talking of behavior, consumers want to trust brands who are going to be around them for a long time and will give them value over a long time, but not just for them, but for their entire families, including the multi-generations with which they holiday. I mean, I've just completed.
Thanks a lot, sir. Thanks a lot.
Okay.
I really appreciate it. Thank you.
Thank you.
Thank you very much. A reminder to all the participants to press star and 1 to ask a question. Thank you. The next question is from the line of Pranav from Rare Enterprises. Please go ahead.
Hi, sir. Thanks a lot. Can you hear me?
Yes, Pranav, we can hear you.
Yes. First of all, best of luck for your next assignment, and I'm really happy to have shared this time in Club Mahindra with you. Sir, I just have one question or suggestion as related to the previous participant's question. So there is a metric called embedded value that these insurance companies actually publish. And our business is exactly like insurance, where we have to pay commissions upfront, and the value of the benefit is accrued to the member to 25 years. So if our accounting team along with some consultant can come out with a metric very near to embedded value, that will be a great indicator to whoever is confused about the value. And even I am confused because the calculation is a little bit complex. And if you can do it, that will be a really helpful metric to establish a value anchor. That's it. And thanks a lot, sir.
Yeah. No, Pranav, I remember meeting you, thoroughly enjoyed talking to you, and I know you always come up with great suggestions, and this is again one of those. More than questions, you give suggestions, which shows your commitment to the business. So I want to answer this on the embedded value. See, embedded value calculation in our business is slightly different from insurance, because in insurance, it's about the premiums and commissions and period. In our business, because of the multiple touch points, whether it is the resort, whether it is the annual fee, whether it is the F&B spends, whether it is the referrals that the members can give, it's an exercise that can be done and should be done. We have tried doing that in the past, but we have not been very sure of the assumptions, because at the end of the day, when you put out anything in public domain, you should be very, very sure that it will play out. And to be honest, the exercise is still on. And I think my inputs to the new team would be to complete this exercise. We could not complete it because, we were a little bit tied up because we had interim CFO and he had many things on his plate. And now we have a new CFO also coming in. So I think this is an exercise worth doing, but bringing it out in public domain requires thorough diligence and a very, very solid backing that indeed this is the embedded value that will play out. Because the last thing you want is to bring out anything in public domain and later on say that these assumptions did not, bear out, and therefore the embedded value was not correct. So that's being in Mahindra Group. We are very, very mindful and conscious, and therefore we haven't we have done work in this area, that I can confirm to you. But we are not yet there. But it's a very worthy suggestion of pursuing.
Perfect, sir. Perfect, sir. Thanks a lot. Thanks a lot. I appreciate a lot, whatever contributions you have done to the group.
Thank you.
Thank you very much. A reminder to all the participants, you can press star and 1 to ask a question. Thank you. The next question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Yeah. Thanks for taking my question and congratulations on good set of numbers all around. Sir, my first question is related to the answer you gave to, I think the first question where you mentioned about the corporate employee membership plan. If I remember correctly, sir, about 10 years back or maybe even further, there was something like this. Can you just throw some more light as to how different it is this time, or is it exactly the same?
Okay. I think I should have explained a little better. So we have a corporate plan where a corporate can buy, a product called Corporate Fund Days. And that has been in existence, as you rightly said, more than 10 years. And some of the corporates that are marquee names are our members anyway, wherein they send their employees as a part of their perk or their rewards and recognition program and they holiday with us. That happens. That is continuously being driven every year. And obviously the corporate fund days plan works in a bit of a sporadic manner because sometimes the deals happen, sometimes the deals don't happen, and the corporate has to really think of this as an employee benefit. So therefore that's a separate product and a plan. The new idea that I was presenting today was that we are going to chase retail sales with the corporate employees. For example, a corporate X, we go to them and say that, listen, we are going to give a very special offer for your employees and they will be able to holiday at our resorts if they bought any of these plans. And all corporate has to do is to give us access. And once they give us access, we don't need the employee database. Everything goes through the corporate. And whoever shows interest, that obviously information comes to us and then we pitch to and sometimes we actually go and put up a kiosk or a big counter at the corporate's office or factory. So for example, let me give you examples also. So some of the public sectors we have faced huge success. If you go to these public sectors which have huge colonies, the people are very keen, they have spending power, they are living in smaller places, they are generating huge amount of income but nowhere to spend. We have seen huge amount of uptake happening in these big complexes of public sectors. So that is what I meant where we go to the retail, basically the employees, and they get an extra benefit because they are employees of that corporate. And that gives us bulk sales, and that gives us better word of mouth, and that gives us better referrals. That is what I meant when I said corporate sales.
And this you started last year only. That is what you mean.
FY24 this has started and we have got very good response.
Would you like to put some numbers into it?
No, we don't split the numbers by the channel of sales. This is another channel of sales for us.
Okay. So if I got it correctly, basically you give them some discount and you get more volumes here.
So it is not just about discount, it is about service, because when they know that, this is being, people are coming through, first of all, Mahindra Group. Second, their own company, internal mailer which we create, which says that, because you are a member of this company or an employee of this company, you are getting this special offer. And more importantly, when they are also booking and they are planning their holidays, we have our team supporting them, as well as when they are at the resort. It's not that they get any extra treatment, but the fact that they are our corporate customers, once they are happy, they obviously through word of mouth, we are able to get other corporates also, because then they talk to their friends in other corporates. And that is how we are able to penetrate. And if one person leaves from one corporate and goes to the other corporate, we are able to even enter into a new corporate because of the good experience that we create. So it's the most important reason is that this is a qualified database in a way. This is people who have the regular earning power. They are least affected. Least is the wrong word, but they don't get easily affected because of the up or the downturn in the economy, unlike a businessman, small businessman, or, people who are self-employed. So that way, we are going after the affluent, which have the